So, welcome back to the show. Today, Michael and I are going to talk about real world tokenization of assets. It's an interesting topic. It's really growing. It's one of the real impetuses for the growth of Solana and ancillary to other tokens and other chains as well. So, we'll touch on all those topics. Pumped to be here and do this again and educate the public on why RWAs and tokenization matter. So, kick it to you, Michael. First thing I'd say is Solana's really grown and been the leader here, and we've seen the stats on the RWAs. You've been around the Solana ecosystem a bit longer than me. What do you see as the drivers there? Like, why all of a sudden now, in probably the last 6 months, we're seeing this major push to tokenization?
Yeah, totally, Steve. There's been a massive increase just in the last quarter, and I was looking at some stats just yesterday. What's interesting to see is if we look not just on Solana, but across the entire blockchain industry, RWAs have increased in terms of total value by about $1 billion in the last quarter, which is not that much, really. It's from about 29.7 to 30.7 billion. But on Solana alone, it increased by over 40%, by over $1 billion. So all the growth across the entire blockchain economy essentially was on Solana. And we're seeing on other chains, they're either stagnating or they're even going down, like on Ethereum, which decreased by 6 or 7%.
And we've seen this coming, and one of the major impetuses, we're seeing the tokenization of multiple assets, credit products, securities now being traded. But we're just really the tip of the iceberg, if I'm correct, because only a handful of stocks are actually, only a handful of ETFs, only a handful of credit products are hitting. You seeing the same thing? What's your, how much faster do you think it can happen that we can have every stock on NASDAQ actually be tokenized outside the US? We'll talk outside the US first and come back to the US, but outside the US, how fast do you see that happening?
Totally. Well, first things first, let's talk about what tokenization actually means. You can tokenize virtually anything. And specifically, we're talking about tokenizing a type of asset called a real world asset. That's generally what this category goes by, RWAs. And most people think of RWAs as stocks. These days, generally, when we talk about RWAs, people are saying, well, how do I trade Tesla on chain? That was kind of the pinnacle of what people do. Now, RWAs can mean a lot of different things. And I think we shouldn't ignore the other categories. You mentioned credit. Credit is a great example of that as well. There's some private credit funds that are available now that you can buy and sell and collateralize. You can borrow against them on Solana, for instance, like the Securitized Apollo Diversified Credit Fund, ACRED, ACRED, which allows you to get exposure to private credit, which is not something accessible to average investors normally. And then the other piece is that you could tokenize property. You could tokenize any real asset, really. And all of those have existed on Solana for many years, but none have taken off the way stocks have in the recent quarter.
Stocks is such an interesting topic when you think about the value that consumers don't really even see yet on the tokenization side of it. And, having been a long-time TradFi guy, the ability for someone to hold their own stock on chain and use it as credit for anything else on chain is so powerful, because today your centralized broker is actually taking all the value of your stock and they're the one benefiting. And that's why some of these platforms, the Robinhoods, the publics, they're making so much money on your asset. And this is changing the game. And that's why I think it's a good place to start with the stock side, right? Because over the next few years, it's going to change the game and who gets the majority of the economics.
Totally. Well, you can think of it kind of like open finance. Right now, when you go to a traditional broker and buy a stock, you're siloed into their ecosystem. And generally, they're a broker for one thing. And all they do is securities. And they have a limit to what other products they have access to. And that's kind of, your money is doing one thing only, and that's all it can do. In the blockchain world, you are able to access all these different use cases and tap into the economic value of one use case and transfer it into another. What that means is you can go and buy a SpaceX stock, which famously was available on Solana on day one in a genuine tokenized form. And we should talk about forms of tokenization as well. But you can go and you can do that. And you can use that to borrow USDC, which you can then use to fund a Visa card, which you can use to go and buy a copy. And so this ability to, like, you just have the full openness and access to your own economics, the value of your own assets.
So if we follow the little step, let's take a simple one to make it easier for people watching and listening. You own SpaceX in a tokenized form. You can lend it out. And in the traditional world, stocks have absolutely different values on the lending. Hard to borrows could be, you could earn 15% on that, while maybe stuff that is so available might be flat or 0 or 1%. So you could actually lend your stock, make 15% on it on a really hard to borrow, in demand stock, get the cash for that, then use that cash and invest that into and earn some yield. So you could actually effectively loop your yield and make significantly more dollars. And effectively, you're managing your own balance sheet of your assets. You to your point of open finance, you're managing your own balance sheet. It doesn't get any better than that. And you are comfortable with the risk you take, not somebody else's risk.
And you own it, right? Like right now, most brokers, you don't even know it, they're going to lend out your stocks. So you go and you own 100 shares of Tesla. Those shares of Tesla are actually being used to short that very same company you're investing in, because the broker is lending them out to short sellers. And you can disable that feature on some brokers, some you can't. When they're being lent out, probably you're not getting any of that yield. Sometimes they'll share a very small amount of it. You can actually own that yield and control whether or not you're lending it, where you're lending it. You can pick the venues based on the yield and based on the other assets you can borrow against it.
Yeah, it's a really important aspect that I think people don't realize. And we're a public company, right? So we have a bunch of shareholders, and our shareholders are owning stock, and hopefully they're in it long term. But at the same time, the broker that they're holding their stock in could be working against them by lending out the shares I own to somebody who wants to go against the stock. Now you get to make that choice in the tokenized world. And maybe it's not just who borrows and on that front, maybe we could do it into, you'll see some vaults and some interest yield bearing programs start to earn yield on some of this stuff. So this is just really the beginning of what will become. And that's why you're seeing some of these guys like Robinhood announcing their own L2. And we'll get into some of that too, doing their own L2 and giving some access to consumers.
It's not just, like you say, the vaults, right? So it's not just about being able to lend it out or anything, but you could think of the way that blockchains work is really programmable finance. So you could have products that let you gain yield in advance of future dividends, like sell your future dividend rights, or hedge future dividends, hedge forex exposure on dividends that you want to use as income to, if your income isn't in USD or in whatever currency the issuer uses. So that's the whole point, is that you have this entire world of programmability available to you. And I don't think we really know what that is going to unlock. We're going to see some really novel use cases that are going to come out.
Yeah, I think that's probably one of the key points you just made, is that we know what exists today, and we know what the traditional markets, the products we have, and the brokers have today, but markets continue to evolve and new products come out. So we don't even know where it's going to go a few, 3, 5, 10 years from now. And we're just setting the stage, which is why we're so bullish on Solana, because it is the leading blockchain for RWAs, but the blockchain in general, and places like Houdini, where you'll be able to, it always blew my mind in the fact, and spent years in traditional brokerage at E-Trade, my own online broker. Like if I own Apple, I can't trade it for Microsoft. I always had to do it in 2 transactions. The future is going to be using platforms like Houdini and a privacy trading Apple for Microsoft and a RWA on chain. That is the most efficient way you could actually trade a stock.
Not just that. So you could, settle in another stock. So it's generally in a traditional brokerage, you're settling for cash, but you could also settle instantly. So when you go and you sell a share in your Robinhood or Webull or any of these other apps, generally behind the scenes, that share is only leaving or coming into your account a day later. T+1 settlement, right? And that might change in the future, to be fully transparent. That doesn't mean it's never going to be faster. And they're working on that, I believe. But is not instant. And on blockchain, it's instant. So that's the first piece. But the second piece is settlement in any currency. And currency means any token, including other tokenized stocks. So you don't have to go through intermediary currencies. And what that means as well is you can potentially avoid all those additional transactions that you may have to account for at tax time. And that 3 minutes it took you to go from one to another and then wait and then go to another, and then the price moved a little bit. And now you have 2 gains or 2 losses, or a gain and a loss that you have to account for. So all these things fall away, and it's just so much simpler and cleaner. And that's so valuable. And obviously 24/7 access. That's something we haven't even spoken about yet.
Interesting. And it seems to me that, and it's good for the blockchain industry, that a massive company and such a well-recognized company in Robinhood is pushing more and more of their business into the blockchain is great. Now we all have opinions on L2s and all those products, but it's pretty interesting to me that the largest retail brokerage in the US is acquiring companies, brokerages around the globe, and pushing more and more into blockchain. It's a massive move for the industry.
It's clear that this is a trend that's going to continue, and that these companies and the way that they're investing into this technology shows that this is something they think will be around for quite a while to come, and is going to be a material part of their business. And that's so valuable for us to see.
The fact that they're putting a lot of their business into the efforts on the blockchain, right? Like that's where the Robinhood business is going. But the idea of the blockchain isn't to be self-contained, right? Like they may be an execution point for people with self-custodial wallets, connecting to get some of the access of their products. Because the idea of the Coinbase does the same thing, right? Like they want to be self-contained, and you only have to come to us and nowhere else. And that's really not the point of self-custodial wallets and blockchain. It's to have open access and to make your platform accessible to everybody. So Coinbase as an exchange, you want my wallet to connect to access your products. Robinhood, I can see a vision where that's where they're trying to go to too, is you use me for the products you want. I want to cross-sell you as many products as you want, but you don't necessarily have to open an account and do everything through me. I think the blockchain makes that, and self-custodial wallets make it much more accessible for people to pick and choose. I want the Robinhood for this. I want Coinbase for that. Maybe I want Kraken for the third piece. And maybe I want Neobank because they have the best yields and stuff like that I want to do and make payment like, I think that's where the blockchain keeps everything kind of an open access point for everybody. And I think, and I'm hopeful that's where everybody goes. Because if we just get to a self-contained blockchain, we're no different tomorrow than we were yesterday.
That's the thing. It's open finance, right? And you've got this constant kind of these two forces fighting each other, which is that on the one hand, we want everyone to build platforms that are open because that's how we unlock the best value for everyone. But everyone individually is also incentivized to try and close off whatever market share they have to hold on to them and get the maximum revenue out of their customers. And those two forces are at odds with each other.
Yep. And that's what, I mean, because the big guys, the Coinbase, the Robinhood and Kraken and everyone else in the space, and even the traditional brokers, the E-Trades of the world that are starting to, bring crypto trading to their platforms are going to go, if they're not going to offer self-custodial wallets for trading, they're probably going to clear and settle using the blockchain. But they spend so much time and effort and money acquiring the customer that they don't really want them to ever leave their ecosystem. But the real value is if you actually do let them leave the ecosystem, because then your product, if it's better, will succeed. And if you don't succeed because your product isn't as good as someone else, you probably shouldn't have had it to begin with. And let someone else do it because they're better. But you've got the customer and you'll make money in other areas. It shouldn't be a forced, like I have to be here and do everything through them. Because then all it does is force people to open up multiple accounts. Because I want Schwab for this, I want E-Trade for that, I want Coinbase for this. And it's the open. I think the way you positioned it as open finance is such a good term that we should use in the future.
Yeah, and it goes both ways, right? If you don't let people out, it's also harder for them to come in.
I think in a perfect world, the open finance and the ability for people, consumers to choose is monumental. That's where if I was sitting and I had spent my years in that side of the world in one of those, and I made my product a little bit more open, I bet you gain whatever you think you lose on product, you're going to get it back 3 or 4x. Because now people look at you and say, these guys believe in their own stuff. They're happy to let you go elsewhere because they know they're delivering the best product. That's a perfect world. For a consumer, it's the perfect world. And you'll gain trust because you're thinking like that, rather than I have to consume every product in my little ecosystem.
We saw as well this week the announcement of OUSD, OpenUSD,
Yep.
a new stable coin being issued in a consortium of big institutional backers, which is just great to see more of those companies that are building in the blockchain space, working to bring liquidity on chain. More competition in the stablecoin space is never a bad thing, as long as liquidity doesn't fragment too much. That's the key piece. I wouldn't want to see a lot of these 1 or 2% market share stablecoins, but having 5-20% market share stablecoins, I think is great.
Yeah, I think it's just for those who think the blockchain's going away or crypto's going away.
Not at all.
You're on the wrong side. You're on the wrong side of that. Yeah, it's not going anywhere. So as we're talking about RWA, tokenization, what do you see? And I would actually position this in a way because I'm in the US, my markets are easy for me to access. You're not. And you've always said this from the first day I met you, like the access to the US markets is not easy for a non-US. So give me what you see as a non-US person, the tokenization brings to you that you couldn't get before, or it was too hard before.
Tokenization really is about a few different things. It provides fair and equitable access. So anyone, anywhere in the world can access what is considered the greatest economy in the world. The most economic opportunity and upside is in the US economy. So how do we get access to that to everyone in the world? And I'm from South Africa. South Africa has its own stock exchange. It's moderately developing, however you want to classify it. There's a growing middle class that wants to invest their money, but for them to be able to access US stocks, US markets, is still very difficult. Generally, you have to find 1 or 2 local brokers that'll do it. They have high fees, minimums, limited list of issuers, companies that you can invest in. And other countries are similar. So, that South Africa is just one personal example, but most countries are similar to this. Some even make it harder because of export controls or foreign currency controls. And there it's not possible to invest $10 into a Tesla share. It's not feasible to invest anything below maybe 1,000 or a few thousand, which in local currency is a lot of money. Median income in some of these countries is less than $1,000 a month, or maybe far less in some cases. So that's an aspect that I find particularly interesting about tokenization, is the ability to access this promise of the American dream economy, essentially, for anyone in the world. Traditional brokerages will lend out your shares, won't share the yield with you, will work against the very thing you're investing in, potentially. They don't let you trade 24/7. And, the economy is very much global, very much 24/7 right now. We're looking at things are happening on a Saturday. Things are happening during Asian hours where the US stock market is closed. And you can't trade on traditional stock markets right now during those hours. That may change, but wait, can you trade right now 24/7 on Solana? Where can you control the yield? Where do you own the assets and choose where they are lent out and who gains the economic benefit of them? On Solana. Where can you go and invest $10 into Tesla and not require $10,000 or accredited investor status or complex foreign currency forms? On Solana. That's the benefit of tokenization.
So it's interesting, as you were saying that, me sitting in the US, there's a lot of global companies too. I hadn't thought about it until you started going about the access from non-US to US. It goes both ways, right? There's some huge global, companies in Germany and France, in the UK, Japan, Hong Kong, in Australia. There's tons. And it's really hard. I could think of maybe one broker in the US that you could actually get access to. And so it opens up the global markets for US citizens too. And in the same way, it allows us a lot easier, like our own stock, Sol Strategy stock trades on the CSE in Canada, trades on under STKE in the US on NASDAQ. But yesterday, or on July 1st, the Canadian exchange was closed. So if you were in Canada, you couldn't trade the stock.
Right. Mm-hmm.
And, with this tokenization, wherever it is, you'll be able to trade. Now, maybe we won't have multiple listings of the same stock on different exchanges, but it comes back to the 24/7, 365. There's no day off. News happens on different days, and you'll be able to trade this. It's an amazing concept.
I mean, the perfect example stock for this is a strategy or any of the digital asset treasuries, right? Because they are very much intrinsically linked to the price of a crypto asset, which moves 24/7. When there's a big move of Bitcoin on a Saturday, you want to be able to trade the stock that is going to move with it, or you have a big gap up or down on Monday, and someone's usually losing money in that scenario, and it's usually the retail traders. So having that access is about fairness.
Yeah, and what's flipping a little bit of gear on you here, like you and I over the last couple of days, going back and forth on L2s. And even though we're believers that Solana is the RWA, the platform for tokenization, it's actually, in my mind, and let me know how you think about this, having other platforms in L2 or Ethereum base, having tokenized securities actually is going to be good for the market. I look at it as like NYSE versus NASDAQ.
Yeah.
Stocks get traded multiple places, which brings more opportunity, maybe some arb opportunities, more liquidity. And when you run a public company, liquidity is one of the key things you want in your stock, so people can get in and out when they want. How do you look at that? Because you and I go back and forth quite a bit about L2s and stuff. And I think it's so many different Rubik's Cube views on that.
Well, I think, it's definitely not valuable. I think it's important with liquidity not to fragment it too much. So having multiple venues to trade is great. Being able to trade on some of these L2s on Ethereum mainnet where you have very deep liquidity. Ethereum, being much more established, much older than Solana. Solana's been around 6 years, so it's not established. But Ethereum's been around for 11 years. So Ethereum has this really deep kind of, I don't want to say stagnant, but like standing liquidity that has just been there for so long. And that's really valuable. And fragmentation happens within the same chain as well. We see it now on Solana, where you have multiple forms of the same stock being tokenized. And they're not necessarily interchangeable because they're by different backers, different issuers is a bit of a confusing term here because the token is issued by someone, but issuer usually refers to the actual company. And the token is not issued by the company. So the token issuer is not the securities issuer. But essentially you have different versions of a tokenized stock that have their own liquidity. So I think whether it's on another chain or if it's a different version of the same stock on the same chain kind of almost has the same effect. But the real benefit with Solana is it's a general purpose chain. That's why we built on Solana. That's why we see the value in Solana is because you can have a chain that does one thing really well, but you'd lose access to all the other things. And that's what's so important. That programmability, that interoperability, composability is a term we hear often. That is so valuable, being able to borrow against it and then use that to pay for your bank, your bills, your groceries. That's really the value that we're trying to unlock and where we see the really big, significant growth in the blockchain economy happening. If you just do one thing really well, like tokenized stocks, then it's just a different form of a brokerage. And you're losing all those other benefits we spoke about earlier.
Yeah, it's interesting in the aspect when you delve deeper into the tokenization aspect. We touched on credit and we were touching on the different blockchains, platforms and, being self-promotional about our own products here with Houdini is the one of the things that got us excited was as there's all this tokenization across different blockchains, being integrated into all those blockchains and allowing consumers to make that choice. It's just it's something that's going to be so important to be able for consumers to do that. Because when there's fragmented liquidity and it's on different chains, you want to be able to access that. You don't want to be handcuffed and say, sorry, you can only trade the stock on the Solana. It's probably one of the problems that's starting to get solved with stable coins and USDC that's on so many chains. You need to be able to make it almost chain agnostic and be able to allow people to go cross chain.
Well, that's really takes us to kind of the other topic, which is the form of tokenization. Stablecoins, USDC existing on multiple chains is fine because it's the same issue behind the scenes. Circle will redeem your USDC, whether it's on BNB chain, Ethereum, or Solana. The issue with the tokenized stocks, you can have a SpaceX stock. You can have 5 different SpaceX stocks on Solana. Different issuers, not interoperable, not interchangeable. You can, you lend out one, you can't repay it with a different one. If you borrow one. And then you can have different ones across chain as well. And so bridging only goes so far there. And that's where we have to talk about the form of tokenization, because it's very important for people to understand what rights and what rights do they have when they buy tokenized stock, and which ones offer them different rights than others. So a very important piece, probably the single thing most people care about is the economic exposure, the price exposure. I want to buy a stock of this company because I think it's going to go up and become more valuable. So as long as that token that you're buying goes up in line with the company, your goal is achieved. But stocks offer so much more that some people do care about. The ability to participate in governance, voting in matters like appointing the board and the directors and their compensation. That's important. The ability to receive dividends. That's also important. Some people are dividend investors. They want to receive dividends, and they may not realize that a tokenized form of a stock does not accrue dividends, or how do those dividends get paid to them. And there are some tokens that solve these things and some that don't, and they have different pros and cons. And that's really important for people to understand there.
I also, now flipping it around from the perspective of the value to the consumer, the value to the company in having wallet holders own your stock. Now, putting aside privacy for a second, we're big on privacy, right? Like we believe but the ability for a company to potentially reach its investors in a way, not to promote the stock, but if you're in a retail goods, if you make chili and you want to reach people, like you could, deliver coupons, you could deliver stuff to use in your wallet to go purchase the goods or get discounts for being a shareholder. Like that's the ultimate value. That's a ultimate value of a shareholder is I own the stock. I walk into Lululemon. I love Lululemon. I want to buy Lululemon clothes. You sign up for their rewards program, but I could reach you as the company to entice you to become part of the rewards or give you something because you're a shareholder. It's kind of mutual benefit to everybody on that front.
Which also goes back to programmability, right? Like you could build a smart contract that can automatically give you a discount if you own the stock. And that's what's so great about Solana and about the blockchain. I think that you mentioned privacy and then being able to know your shareholders. And that's where it's also important to differentiate privacy, security, and identity. So you can have your identity private whilst the company can still see which wallets own their stock. And that's important for a few different reasons. It's not just things like rewards, which are great use cases, but it's also really helpful for all investors, for investor protection, to be able to see who are the owners of the stock transparently, not rely on quarterly filings that are obscure on some government website that are hard to dig through. And, being able to actually just go to
they get filed 6 weeks later, right? They get sorry to interrupt, but they get filed 6 weeks later. So you're not getting that info in real time. The chain on chain gets you real time information, which big institutions have. It levels the playing field for big institutions to consumers.
So if there's something going on, something buying up 10% of the company or anything like that, you can see it immediately. If all of the stock is on chain. Obviously, when some of the stock is not, then you wouldn't be able to. But that's a gradual process of getting to that point. But that's really the benefit. And then maintaining private identity is something you can still do in parallel through wallet hygiene and using products like Uniswap. Absolutely.
Yeah, my gut tells me that over the next 5 years, you're going to see a material change in companies listing their stock and getting it on chain and more volume going on chain. and more companies listing it. It's a small segment of all companies on chain right now. But I think over the next 5 years, you're going to see this explosion and it's a real use case of the blockchain. And that's what's really important when you sit with different investors looking at the blockchain and companies like ours. Is like, where's the real world use cases? And this is right dab in the middle of, for investors. You could see this clear as day happening and a real value prop.
Yeah. I think the really exciting thing is when we see the first IPO on chain. And I think we will, maybe in the next year or two. And the question is, IPO, everyone now thinks of SpaceX. I don't think it'll be $1 trillion IPO. And we'll see some small ones to start. But we will start seeing bigger and bigger IPOs. Again, with SpaceX, it was available day one on chain through Backpack Securities, and Sunrise DeFi did a fantastic job bringing that on chain. And speaking to form of tokenization, theirs is one of the better ones where you can redeem your token for real shares in a brokerage account and transfer them out to any other brokerage account and vice versa, creating that liquidity and flow between the off-chain traditional securities and your on-chain token, which is so valuable and so important. That's that next step to getting closer to the issuer being on-chain themselves.
It's and so a lot of this conversation, when you think about the on-chain tokenization of public companies, it's mainly happening offshore from the U.S. Because we haven't gotten that regulation yet. Even the Robinhood new program with their L2, it's all non-U.S. And if we could ever get regulation in place and it's looked at and it's actually really open-minded about how we're going to do it in the States, because I get it. There's all sorts of rules, national best bid and offer rules and order protection rules and all this really, stuff that's been in place for years, sometimes too long, and it needs a refresh. We need it in the States because that's when you're going to get even more unlock for U.S. investors and that big population that holds these stocks to start doing them on chain. We're just not there yet, but I'm really hopeful that we can get some regulation to do that.
It's more available than you think already today in the States. So, first of all, Superstate, our friends there that we know well, they've been working on this for a long time. Their tokenized stocks are available to US investors, retail investors, no accreditation required from day one. So a couple companies, Ford Industry, Galaxy are two well-known ones, have tokenized their stock through Superstate. Key caveat, you need to KYC your wallet to use them. So you can't just go and buy that token on Jupiter without first going through a secondary process to verify your identity. Forms of tokenization, again, right? There's different ways of doing it. And there are benefits to that way and drawbacks, obviously. Now, the thing with, yes, most of the tokenization is happening outside the States. But once the tokenization happens, the tokenization is really the issuance of the token. Once the token is issued, it's trading freely, and they're generally available and not geo-restricted because you don't have to KYC your wallet, so it's not possible. So you can go and trade those tokens. The question really is the ability to convert in and out of the actual underlying security or redeem for cash. And that is what is not yet as well supported for US investors. And that's hopefully something that with clarity, with new CFTC and SEC guidance, we will get to at some point in the future.
So last question to close all up on tokenization and RWAs. What's an asset class? We talked about credit. We talked about stocks. Like, what's something that would be a wild, out of the blue, like, man, I'd love to see this RWA tokenized. Like, we heard about real estate and buildings, but like, what's an asset class that, you think we should be tokenized to be really cool to do that?
Well, there is one that is in fact tokenized and has been tokenized on Solana for a few years now, but is not that well known, which is whiskey. You can actually go and buy ownership in a cask of whiskey or individual bottles and via a platform on Solana called Baxus, BAXUS. And you have a token that represents a physical barrel of whiskey in Scotland or somewhere in a cellar. And
what's the name of that one again? I need to get there. I need to get there in that one. What is that one?
Baxus.
After this, I may go do that right now.
Yeah, it's very cool. And something similar for wine. I don't know if that exists. That personally would probably interest me a bit more. So I think those are definitely interesting asset classes.
So it's basically the future. It's a future market on whiskey and wine. Like that'd be pretty cool. Like that'd be really cool for vineyards to be selling.
Not just futures, no, but buying an existing barrel today that you think will be worth more in the future. But it's not. You're not buying a future production. You're buying today's existing whiskey that's being held in a barrel in a professional storage facility for you. Your ownership of it is represented.
Got it. Yeah. So that, I mean, it's actually two fronts. It's like you could hold, I'm thinking about it from a wine perspective of the future.
It could be futures as well. Like if you're buying on promo, like a new issue wine, usually you buy it like now in 2026, you would buy a 2025 release, but you only get the bottle in 2028. Yeah, you have to buy it and commit your money 2 years up front. That's an example of something you could do through tokenization, where otherwise you're dealing with kind of very traditional paper-based wine dealers and merchants, and you're giving them your money, and you're hoping 2 years later they rock up with a box of wine.
Yeah, and then you hope it's good. Yeah. So then you hope it's actually a good wine to drink.
Yeah, exactly.
Any lasting comments you think that we all should know, or thoughts on tokenization?
I think the key is that tokenization is a big word. It covers a lot of ground, and we've seen a lot of forms of it, and some are going to sustain and remain and be more valuable, and others aren't. And at the end of the day, what's going to be really valuable is where we have easy access, redemption for an underlying security. Shareholder rights, I think, are important. And so now I'm talking about specifically about stocks, right? And liquidity. And that's just getting bigger and bigger. And I think the global access piece is so big that a lot of people are overlooking. And when someone cracks that problem of how do you build a really easy platform and get the awareness of those markets that, hey, this is where you can access these stocks, that's going to grow really rapidly.
Yeah, it's truly so exciting about this transformation of the overall market, where it was, from under the cherry tree on Broad Street in New York in 1929, or just about that, and reading that book. So it's quite interesting from 100 years ago to where it is today. And this evolution is just a constant evolution, moving faster than you could think. And it's coming fast. So being prepared to handle it is exciting. It's why we're in the business. We love it. I mean, it's what makes waking up every day fun.
It's groundbreaking. Literally. Not literally.
So thanks for everyone for watching today. Appreciate all the support and look forward to next time. Thanks, Michael.
Thanks, Steve.